Good morning, everybody. Happy Wednesday. It is April the 6th, and we're about an hour to the opening bell. I'm your wealth guy. Let's talk money. Let's talk pre-market. But I want to take a look at what happened yesterday because the markets in the morning were actually quite stable, a little bit to the negative, but stable. And then throughout the day, as Fed representatives came out, the markets turned and quite aggressively to the downside. And we're seeing a little bit of that again this morning as the markets are currently down about 220 points for the US 30. Tech is down about 220 as well. But let's talk about what was said exactly by the Fed, what we can expect, because today we have another Fed representative speaking this morning at 9:30. So that's FOMC member Harker. And then later today, we do have the FOMC minutes at 2 o'clock. But yesterday, the Fed's views were very hawkish. So I do have notes. I'm going to read off of them a little bit here. So I do apologize for not staring at the camera the whole time. But the Fed's hawkish views yesterday essentially declared that they need a sooner than later implementation of a drawdown from the balance sheet, essentially selling assets. Now, this is potentially supposed to help curb inflation. However, let's be honest here. There's a couple things we need to know, or at least one primary reason we need to know, or thing we need to know, and that is that who is going to buy the debt? No one's going to buy these assets because the truth of the matter is if they went to the open market, they're probably going to get a better asset at a better yield. So what is the incentive for someone to come to the Fed and take the assets off their balance sheet? I just don't see it. But at the same time, here's the thing. The Fed also declared that using assets is not their primary approach to monetary policy, and that they want to really primarily stick with interest rates in order to adjust and battle inflation. And so there's that talk again of 0.5% increase coming at the next meeting or following the next meeting. Will that happen? I'm not sure. Even if it does, you know my opinion, it does not really going to make too much of an impact. I think a quarter point would probably be a little bit more realistic than 0.5 point, but we'll see what happens. The other reason that the markets did pull down a little bit, it was because of the Russian sanctions that are coming down. We'll see if that really happens. Europe is very hesitant to put too many sanctions on on Russia, but we'll see because that continued narrative again extended to today as additional sanctions are being discussed and the markets are already in the red. But the big thing I really wanted to talk about here and why I felt I needed to bring it to YouTube just because I needed a little bit more play time is because the 10-year yield, which I've talked about many times as a major indicator for market movements, jumped up quite significantly yesterday. And even if we take a look at the 10-year yield this morning, it's up another 3% and change. Now, yes, it is off its 4.07% increase this morning, but still sitting at, I think it's 3.17 currently, is another big jump. And I've always talked about the one thing you're going to want to watch for is a jump, a multiple day or a multiple series jump in the 10-year yields to the upside. And that's probably going to indicate that the markets are getting ready for a massive pullback. So it's just something I wanted to make note of and wanted everybody to kind of keep an eye out there on and just watch it, because if the markets continue to push the 10-year yield higher beyond today, I'm going to say that's probably a very serious yellow flag and might be time to take a very defensive approach to your portfolio. The other thing I wanted to take a note of is the Dixie or the dollar index. It is up again today. Not very much. I'm going to say it's pretty well flat. It could turn into a fear trade today, but we'll see as the markets continue to slide. But let's have a look at the markets in general, because if we're going to do pre-markets, we have to take a look. This morning, as I mentioned, stock futures are currently down, with the US 30 down about 230 points currently. Tech currently down exactly the same, 229. If we take a look at crude is up again today, up about $1.23. So that's 1.25% right now. So a strong sign for crude, as I expect crude to continue to march up all throughout the year. Taking a look at the US dollar, as I mentioned, very flat. It's actually turning red as we speak, currently down 0.05%. So very flat, but slightly red. The 10-year yield, however, is still up about 2.5%, which is a nice little pullback over the last 15 minutes because we were sitting at 3.17. So a little bit of a sigh of relief there. Taking a look at cryptocurrencies right across the board, cryptos are red over the last 24 hours, with Bitcoin currently sitting at 44,800 and Ethereum currently sitting at 3310. So again, levels here are very important to keep in mind, especially with crypto and the volatility of the natural markets there. Having a look at commodities today, we're seeing a little bit of a boost here in energy. So we're taking a look at crude, we're taking a look at natural gas, oil, all up to the green. Taking a look at gold and precious metals. However, gold is currently down about $1.30, so not very much pressure to the downside, but it is there. Silver also down about 24 cents as we speak. Now, if we take a look at agriculture is currently down right across the board. Very few green ticks in here. However, I do believe that will change all throughout the day and very well will change as we continue on throughout the year. I'm still quite bullish on both precious metals, or actually all three: precious metals, energy, as well as agriculture. And that's it. As I mentioned on our economic calendar today, just keep an eye for the FOMC meetings and minutes, later today, as that will certainly impact the market, most likely to the downside. But that's it, everybody. I will see you at the opening bell.